Good morning. This is Larry McMillan with a market update on Monday, January 25th. Things still remain pretty bullish. The S&P chart and all the other major indices are headed northward or northeast, anyways. Um, so that's positive, and as long as the S&P chart is in a strong uptrend like this, where it's above its moving averages and the Bollinger Bands or modified Bollinger Bands are trending higher, that's all very positive. So we need to stay, long. And while there are some short signals coming up here and there, and they can be traded in small size against that long position, right now we're still holding onto a bullish opinion. Put call ratios are just moving sideways right now at a very low overbought level. Call buying remains very heavy, and frankly, the put call ratios aren't giving us much of an indicator at all to go with. The next signal they will probably give is a sell signal, but that hasn't been forthcoming, and so we'll just have to wait and see on that. Market breadth remains fairly positive. The breadth oscillators are on buy signals, and cumulative volume breadth has been consistently making new all-time highs. So all that's positive for breadth. New highs continue to dominate new lows, and that's bullish for the market too. On Friday, there were only two new lows on the New York Stock Exchange, and 2 other days last week there was only one. So that's about as bullish as you can get from that indicator. Volatility is, could be a bit of a problem, but it really isn't. I mean, we're operating on a VIX spike peak buy signal right now, so that's positive. And the trend of VIX is positive because the 20-day moving average and VIX itself are both below the declining 200-day moving average. What is perhaps the only worrisome thing about VIX is that it's a little bit on the high side. It's above 21, it can't seem to get below that, which means that large traders, institutional traders who are the ones that trade these SPX options, are still paying up for puts. And they might not necessarily be smart money, but they could be. So there's a bit of a worry there, but doesn't seem to be an immediate one. It would only manifest itself if VIX were to turn and start to shoot higher. The construct of volatility derivatives is also positive. Now February VIX futures are the front month, and they're trading below March, so that's positive as well. There's a big premium on the VIX Feb futures, and that's a positive thing too. There's only a slight minor negative in that we're in a potentially seasonally bearish period here between January, say 12th and the 28th, or more like the 18th and the 28th. So later this week, though, or on the 28th, it will turn to a bullish seasonal pattern. So that will completely reverse itself. We do have the McMillan volatility band sell signal in effect, and we also have a realized volatility sell signal in effect. So we have traded those with small positions against our larger long positions. But the main idea here is to stay long, raise your trailing stops, roll your calls up to higher strikes if it's appropriate, and continue to enjoy the bullish ride. Just as an aside, it seems to me that there's an awful lot of bearish talk out there, and that's probably bullish for the stock market. I invite you to visit our website, optionstrategist.com. We're off to a good start again this year with our newsletters, and so hope to see you there. In any case, good luck and good trading.